start.
Now let's do some industry-specific analysis, which has a connection with the current tariff wars, if you want to use the word, but let's say the Liberation Day tariffs imposed by Mr. Trump. Now, if you take a look at the garment exporters or that industry from India, what are the strengths? We do a quick SWOT analysis. Quality and reliability, they are considered of high quality and reliability, which can help them maintain their market share in the US. They have slight premium on the Bangladesh and the Sri Lanka products, but not all across all the categories. There is a diversified product range. Indian exporters offer a diverse range, including ladies and gents. Now, the ladies wear is more concentrated in the NCR area of Noida, Gurgaon, and Faridabad, while the gents' garments are more in the south, especially in Tirupur. Now, competitive pricing. Indian exporters have a competitive pricing advantage due to lower labor costs and government incentives. Currently, the exports are about $2.3 billion. They had gone through a little dip during COVID area. Now, they are concerned about the tariffs. So there are some weaknesses, that is the dependence on the US market. So Indian garment exporters are heavily dependent on the US market, which makes them vulnerable. Number of other countries or companies have diversified. Companies are not very large, they are basically SMEs. There is a high tariff burden. Indian exporters currently face a significant tariff burden of 10% standard by USA, plus 35% reciprocal tariff. Now, this is something to be concerned about. It is currently suspended for 90 days, which can erode their competitiveness and profitability. Now, looking at China, China has about $7.5 billion garment exports. It has even higher tariffs, about 135% currently, but their negotiations have started and they might reduce. But we think that India will continue to have a tariff advantage. If there is a tariff advantage vis-a-vis China, China could try to shift to Vietnam. But Vietnam also has a higher reciprocatory tariff. Bangladesh also has a higher reciprocatory tariff because they both have high trade surplus with the United States. So overall, looking at it, what can really help is the technology, innovation and marketing to separate yourself out from the other Me Too suppliers. But that requires investment. Now, therefore, let's look at the opportunities. We've already touched upon diversification of markets. Indian garment exporters can explore more markets. ASEAN, for example, Europe, of course, deepen it and reduce their dependence on the US market. Now, when we say European market, even there, 3-4 countries, which are well off, or you are aware of their names: Germany, France, Spain, Italy, and the story stops there. The Indian exporters should consider a number of other countries, smaller countries, Norway and not Iceland, but maybe Iceland too. For some people, it will be like a district. And then we have the Eastern European countries, Slovakia and Poland and so on. So, looking at this factor, investment in technology will be required. Indian exporters can invest in technology and innovation to improve efficiency, quality and competitiveness. Otherwise, it is almost granted that China will go through this route now. Government support. Indian government can provide support, but if there is direct subsidies, the tariffs will come to hit at it. So it's not a question of subsidies, but it's a question of design, it's a question of delegation, it's a question of exploring new markets where the government can help and improve the sustainability of the organizations. Now let's look at the threats quickly. There could be recession in US because of these high tariffs. China is currently not even exporting, and there will be shortage of goods. There could be recession, therefore. If there is recession there, it will hit our industry. Now, we have to remember that the profit margins of these units are not very high, and they don't have great financial strength to be able to take care of the ups and downs. So it could hurt. And now, this is where the indirect effects of what happens in the global market are, that there is recession in USA because of their tariff policy, but the Indian and the Sri Lankan and the Bangladeshi exporters could go through major hiccup. Now, if the US imposes higher tariffs on Indian garment exports, it can erode the competitiveness and profitability in no time. So, shift in manufacturing is what is indicated. If buyers demand a 50-50 sharing on tariffs, that's what they are demanding from the Noida people, one knows it can lead to a shift in manufacturing to countries with more favorable trade agreements or lower tariff. In other words, now onwards, it is the tariff negotiation between the governments which might decide where the locations of the industry will be and shifting. Now, whether there will be permanent advantages and disadvantages or there will be short term, of course, there will be hesitation to shift. But India could go more to Mauritius, perhaps it has already gone, or African countries, and then start exporting from there. So the likelihood of manufacturing shifting from one country to another depends on various factors, including tariff structure. We already explained it. Countries with more favorable tariff structures or trade agreements may attract more investments. Labor costs. Countries with lower labor costs may attract the industry. But in India, already the labor costs are kind of relatively least, maybe except some African countries and all that. But I think slowly the labor cost advantage is eroding, and it is the tech advantage and the reliability and the quality which makes quite a bit of difference. Because in any case, the cost of manufacturing and the labor cost in it is a very, very small fraction of what the retail prices are. So branding and positioning in the market, making sure all the stitches are right. Now, therefore, in this context, countries like Vietnam, Bangladesh, and Sri Lanka may benefit from the preferential trade agreements and lower labor costs, but likely it will be India which will have a preferential trade agreement with US. Indian garment exporters can still maintain their competitiveness by investing in technology, innovation, and quality, as we've already said, and by exploring new markets and products. Thank you very much.